If you're 5 years or less away from retirement, there's five things that you need to do to make sure that you're adequately prepared. First, know the level of risk that you're taking. And there's three forms of risk to take a look at. The first is the risk of loss of value of your savings and investments. This is basically movement of stocks and bonds with respect to the impact on your retirement savings. The second is the loss of income, whether that be through disability or any other form of losing your job. You lose your job in this retirement red zone could significantly throw a monkey wrench into your retirement plans. And the third aspect is loss of life, especially if you're in a partnership or with a spouse and you're using these years to save as much as you possibly can. The loss of life is going to need to be protected with some type of life insurance. Is it there and is it adequate enough to keep the other spouse whole to keep their retirement goal on track? Two, your mixture of assets. You need to know what the speed limit is that you're comfortable driving when it comes to your investments. You also have to know what speed they're currently going at to make sure that you're still comfortable with how they may be able to perform going forward. And this is critical in that 5 year red zone because if there's any big surprises, just like I said in risk, that could really derail your chances of being able to retire in the way that you want. Third, your savings opportunities. At this stage of life, a lot of folks have they're empty nesters, those college tuition and AAU and all the other types of expenses with respect to having children, those drop away, which leaves a lot more cash flow at your disposal. But this is a really critical time to make sure that that extra money is used to make sure that you can stay on target or maybe even enhance your opportunity to retire in the time frame that you want. So, making sure that your retirement plans, that you're maximizing your contributions there. And now that maybe you're empty nesters and you don't need a family group health plan, you can take a look at a high deductible health plan that gives you an opportunity to open and establish a healthcare savings account, which is a great tool to be able to save more money tax efficiently to offset some of the number four items, which is spending. So, number four, spending. Most retirees, the biggest expenses are going to be their housing and their healthcare expenses, and then followed by all the other fun stuff that they want to do. So, while you're in this 5 year zone, what's the plan if you have debt outstanding? Let's say a mortgage. Do you want to retire that in a certain period of time? Do you want to retire it before you get into retirement or after? How is that going to affect your savings program and the portfolio's ability to give you the retirement paycheck that you need? All those questions need to be answered, but addressing it is a very, very critical thing to do to make sure that you at least have a game plan to move through these next 5 years. And fifth, your retirement method. Are you planning on going cold turkey? So the Monday after you retire, 9 o'clock in the morning, there's nothing to do, and you're sharing your house with your spouse that maybe you haven't spent as much time with over the course of your career. Those are going to be some pretty significant things to have a discussion with your spouse or your partner with. So if it is going to be cold turkey, make sure that you're mentally, emotionally, and socially prepared for that. Or are you going to work a more phased strategy? Maybe you have a line of work in a company that you work for that allows for a gradual reduction of hours over time. Maybe that's a better way to transition into retirement than maybe cold turkey, especially if you don't have a game plan as far as how you want to be able to spend your time. So if you're in that retirement red zone, 5 years or less, use these five things to your advantage as you have enough time to be able to make adjustments as you're heading toward that big date.